I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. Welcome back from 4th of July holiday week. We saw some very impressive action, particularly Wednesday and Friday. Now with participants back on the desks, we're going to look to see here, is it a time to go short, to just stay where you are, or is it a good opportunity to get long again?
Well, it's funny. Wednesday we were here. Futures were down 10 handles. You had news about Greece, about Portugal. You had, a lot going on. Even they were parading Egypt every 5 minutes on TV. And the question was, how is the market going to handle it? So on that Wednesday, I think we went from negative to positive. And then even on Friday, when the jobs report came out and they said, oh, it was too hot, rates have to go higher. The market went up with rates going higher and closed on the highs and reclaimed the 50-day, which is more constructive versus bearish.
Right, and then we also had the Russell close at all-time highs. So it's been some really impressive action. One thing to remember about going into this week, Monday and Tuesday, we don't have much economic data on the calendar, but we have FOMC on Wednesday. Alcoa kicks off earnings tonight, but what participants are really going to be focused on are the financials reporting on Friday. So that's what we're really going to focus on and see how the market is trading and how it's acting going into that.
Yes, and right now people want to, like the bears want to say, oh, well, last week was short. Last week there was no one around. But you know what? If you were long, you could have made money.
Right.
And if you were short, you could have lost money. And if you come in today saying, you know what? People weren't around. I don't believe in the move that we did see on Wednesday and Friday, and you're still short. You didn't cover when we reclaimed the 50-day. Today will be interesting for you because if we look at the chart here of the S&P, you will see that, remember that move down to 1560 when we broke below the 100-day, came back above it, was your buy signal. Okay, then from there we bounced back into resistance. And you know what? Even me, no one knew whether or not it was just a second quarter window dressing bounce or some kind of performance, so people can get paid. But what happened was we digested, we went sideways, and we broke through a trend line that's been intact, since pretty much the May 22nd outside day. We saw this once before. Remember right here, right when Big Ben said or really indicated tapering, and that's when we sold off. So for all those people who said, you know what, I don't believe in this little move right here, you better hope that today we go from positive to negative and close back below the 50-day, because now the longer we hold above this level, the more indications we get that we will take out these highs at some point going into the fall. And did you see Goldman's call today?
Right, about their S&P target they're reiterating.
They reiterated for 1750, but I kind of like this because last time they came out, I was like, really, guys? You go back to this chart one more time. They came out and upgraded the market right here. Okay, that was when we were above the 8-day, above the 21-day, after an enormous move. We saw this from the start of January. So here, after a corrective phase, which is what we just had, we went down 6% off the highs. I kind of like their call, and I do agree with it. And everyone likes when I put my probability out there. I do say at least 70, 75% that we do take out the 2013 highs, and we will see a 17 handle at some point before the year's out.
Right, well, if you look at, the tail end of that chart, you see that healthy consolidation in there, and that was certainly your signal. Speaking of strength, we're going to check the temperature of sectors, kicking it off with the financials. This particular ETF gained $2.1 billion in new assets for the last quarter, making it the 3rd largest asset gainer. Those are your names including JP Morgan, Citi, Wells Fargo, Goldman Sachs. Those are the names that have acted well that comprise a big chunk of this ETF.
Right, and Friday we'll see Wells Fargo and we'll see JP Morgan. And what some people don't understand is, again, like you said in the beginning, how do they trade from now till then? Did they just price in good earnings? Did they not move? And maybe on lukewarm earnings, do they go higher? So there's a lot to know there. And if you look at the XLF, you will see that overall, this is acting in line with the S&P, held higher, above the moving averages, closed pretty strong. But you have some, just say divergences within this group, because look at Goldman Sachs. Goldman Sachs is at support on the bottom end of the range, which could be a trading opportunity above 154-ish, whereas JP Morgan didn't really pull in. the way Goldman Sachs did and already broke back above this downtrend. So, if it continues that way into Friday, it's going to need a lot more in its earnings to sustain it. So we'll figure out the action for between now and then.
Moving along to the IWM, we saw the Russell close at all-time highs on Friday, and this is an ETF that's comprised of small cap stocks. So you're seeing some nice performance here as well.
Right, well, they say, growth is going to start coming back somewhat. This is the area to go to, and traders typically love when technology leads a market and the Russell, because Russell shows that people want to speculate a little bit. And if you look here at the Russell, you will see that it's led the move. It actually held this trend line going all the way back. It held the 100-day moving average, and it's had a nice spirited move to new highs. So if you were looking at the Russell and all you want to do is be short everything else, this could have given you some clues. You know what? I better cover some of my shorts because this should not be happening if we were in such a bearish environment.
Moving along to the retailers, XLY is a discretionary fund, but we're going to take a look at the RTH, which is more consumer-oriented. Both of these groups have been up 20.4% for discretionary and 25% for consumer year-to-date.
Right, and retail, everyone's been saying retail's dead, and the retail buyer out there.
The consumer spend has been a nice surprise this year, so.
Exactly. So again, and this confirms it. You look at the chart here, and you will see the RTHs, also showing relative strength, a good sign to watch to see if other sectors can get going. And if you look here, this was your bottom in the RTHs, almost where it broke out from after filling that gap. What did it do? Well, what didn't it do? It didn't touch the 100-day moving average. That showed you there were buyers in front of it, and you saw the spiders or the S&P actually go through it. Relative strength, that's why you had such a big bounce back. And if you go here, we're right back at these highs here, above all the moving averages. So this is a group to find some relative strength. This is a group to watch for leadership. So stay with that one.
Moving along to the home builders, XHB, we saw some outflow week over week on concerns that higher rates might lend to higher mortgage rates. So there was some pressure on the home builders.
Yes, and we've been talking about the home builders, and there is some money that leaves and comes, and relative strength does change, and that's what the sector rotation means. And there was some money that rotated out of the home builders because they figured with rates going higher potentially, it's going to be a little bit harder to get one of those big 30-year mortgages. So this group, has been showing relative weakness. So you look here at the chart real quickly, which I haven't cleaned up in a while, which I was at this point, I think, showing this head and shoulders formation with the neckline right here. Okay, it was the first time that I actually broke a trend line. Okay, something different. Look at the trend line that this group's been following all the way back from here. So what happened with the home builders? It hit the 200-day, okay, showing relative weakness, right? Everything else that we just showed you didn't even get to the 100-day or held around it. This one broke to it, is trying to get back here. So it'll be interesting to see if the weakness will persist. Right now, this wide range bar is in control still here. In order for the home builders to act a little bit better, it's got to get above 30 and then sustain above 30. Otherwise, if we do turn lower, this will be probably one of the first groups that people try and short. And
let's wrap it up with the transport ETF, the IYT. We've seen reports of higher rail traffic, and that tends to correlate to higher GDP growth. So it's been struggling with its 50 DMA, but we have seen some losses get paired here.
Yes, and this is what they say leads to that, right? The transports. Right. So with that said, you look here, we'll see what's going on here. Here was your pullback, just like everything else. Seems like it didn't get to the 200-day, so stronger than the home builders. Okay, I haven't really looked at this group in a while. It's bounced back. It's not through resistance, okay, the way the spiders busted through it or the financials busted above it or the Russell. So this is, I would say in line / a little weaker. So at this particular point, if it can get above and stay above this 112-ish area, perhaps it could see a move back to these highs. You also have resistance right around here. So overall, the transport's not leading, but not exactly lagging.
Okay, we're going to jump into a quick commercial, and when we come back, we dive into the trenches.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit T3Live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Welcome back to the Morning Call. We dive into the trenches and go to one of our key themes for 2013, high beta tech, which is performing really well. Let's kick it off with Google. We've seen a little bit of slowdown here. Some of the concern from a fundamental perspective is two of the biggest Android backers, Samsung and HTC, there's been some growth slowing there. So that's really going to be one segment of their balance sheet that we're going to focus on, particularly as we hear a comment around that as we go into earnings in tech.
Right. So like lately, because of that, it's been a little bit more lethargic. Usually Google has power, trades through levels and goes, and it hasn't been that type of trade, as of late, but it's still inching higher. And the intraday action's been a little hard to grasp. If you listen to Sperling, he's been trying to do it, and he's been staying long it, but it's still been hard, or he's been trying to anyway. With that said, look at the chart. Okay, it shows you that entries and exits still matter if you do approach it short term. This was your last buyable, in power, I would say powerful breakout. Okay, this was right around, what was this, 880, went from 880 as high as, 891, I'll give you a quick 11 points, pulled in, then went, up to highest, didn't have enough power. Then within this little rally up, it's been very hard, for shorter term guys to stay with. If you said I'm staying long because Google's been showing relative strength all year, okay, then you don't look at it every day. Look at this, it's held above the 50-day moving average, whereas most indices came and tested 100, some 200, so that's still showing you relative strength. So with that said, maybe if it gets above 900 to 902, it could show you some power. But I think in order for it to really, break above 920 and get to some of those $1,000 targets that people are throwing out there, it's going to be after earnings, and they're going to have to show, incremental growth or at least some power across all segments, including some of the, the concern about, their handhelds.
Right. Moving along to Netflix, it saw a nice move Monday of last week, so there's a couple levels that we'll be taking a look at this week to see if it can potentially break through.
Yeah, I like the setup. I'm actually going to watch this one today. Netflix, it gives you nice moves when it breaks above technical points. It's been a go-to stock all year. It's been on the list most of the time long, sometimes some cute little shorts, but ultimately you look at this pattern here, it's very strong. Okay, ever since this gap up, it's done some little micro action, but what did this do also? It held above the 50-day, or actually danced around it. But anyway, this was big support that it never got in, and then boom, gave you a little wide range bar, igniting bar above 217, and now look at this nice bull flag. So with that said, tactically, if it can get above 227.50, today I think some of my traders will jump on it, perhaps including me. But then the bigger level here is around 231, above 231. Then all of a sudden everyone's going to be talking about 248, which is the highs of 2013. But overall, nice and tight setup. In Netflix, when it's tight, you got to look there.
Moving along to LinkedIn, stronger jobs reports are certainly going to provide some momentum to this as well.
Yeah, and this one has been heading higher. It's been pretty much in the penalty box since last quarter, only because it was so overheated. It was above 200. This was one of my three amigos as far as new issues. I said, throw it in the drawer. It's got all the ingredients of being a major winner over time. Besides trading it, you look here at the chart, you will see LinkedIn, still inching higher, broke above this mini downtrend at 190. Historic highs here are 200. You look at the weekly chart, I've talked about this so many different times, new issues that have the power to continue, and look at this nice pattern here. We've talked about this so many times when Jill was here a lot more often. This, cup and handle pattern where here's your cup, here's your handles or even channel. This was your buy point, way back when, and look how it's consolidated, held above this 160 area. Now it's starting to go again. So if I were, to whisper in the executive ears of LinkedIn, I would say, guys, if you have a strong quarter, announce a 2-for-1 stock split, so this way you're not a blimp above 200 where everyone starts talking about your valuation.
Moving along to Amazon, another one's been seeing some impressive action. It's setting up really nice for another breakout today.
And this one, this has been on the list, and for a week and a half, I've kept posting the charts. I'm like 272, 280, 284. This could be one of the high beta tech stocks to make new highs of 2013, maybe even historic highs. Intraday, it's been a little wishy-washy. I've tried to play for momentum there, and the momentum hasn't been easy. But overall, if you've been just long Amazon as a swing trade, look at the chart here. It's been really, really strong. This is the upper channel that it's been in ever since that that false breakout or breakdown below the 200-day. It's been trending higher. Here was a nice little trade above that. Remember the 272 area, couldn't break through highs, came back during the corrective phase, held in there, and then now look at it. Above the 284 and change all-time high, opening higher. You go to your monthly chart. You know, this, my friend, shows you how the stock market could build wealth from 2008 all the way to historic highs. You know, what, years later, if you stayed with Amazon, which wasn't easy because every analyst out there, you know, was like, oh my goodness, look at the bad earnings. It was bought. Bad earnings. It was bought, or not even powerful earnings.
Right.
So it shows you that listen to the price action. If you didn't understand it, just step aside. But to be short Amazon just because you think their PE is high, the stock action has made you feel probably not really good about your trading account.
Well, I just think about trading overall, particularly the market that we've been in the past 2-3 years, that really being clear about your time frames and being able to tactically trade and sort of get out of traditional mindsets where it's just about charts, just about fundamentals. Being tactical is really the way that we've survived a relatively tricky market, particularly the uptrend that we saw from November 2012 to end of May.
Right. And there are a lot of people that fought that, saying we shouldn't be higher, we shouldn't be doing that. But when you say that, that means something's against you and you're trying to have an opinion. Like same guy with the gold, bulls out there, or the gold bugs. Technically, we'll just do it as a quick hit. Gold has given you many ways out of it. Remember here, this big, on the monthly, look at the size of this, king and queens formation. Bounced up, failed. That was this intermediate point. Remember we talked about 161. That was one signal to get out of the way. Then when it broke this macro support, look how clear that is. Okay, we talked about it the day it happened. Then it stayed down here, broke this, and now it's hovering again. At this point, I tried to catch a trade in gold and silver as far as tactically off this low here. It's still somewhat in there. I think it's filling the gap today, but ultimately, just remain very tactical here or have a longer term time frame, but obey the charts because these charts told you to get out of the way versus closing your eyes and going underwater and drowning in the metals.
And quickly wrapping up the trenches, we're going to take a look at Apple. This is another one, sort of where we have the concern with Google is the smartphone market peaking. And the concern that we've had with Apple, and we've seen that in the price action over the past 6 months, is margin compression and revenue slowdown. So those are really the areas that we want to focus on here as well.
I personally don't think that the smartphone market is now saturated. I think kind of sixth inning, seventh inning.
Some of the emerging markets.
Right, that they're going to start doing it, and I think there's going to be some more upgrade cycles within the smartphone space. I just think that everyone started to really hype up Samsung way too much. The same way they hyped up Apple when it was, in the 700s. They made very unrealistic expectations for the iPhone, okay, or the iPad, whatever. With that said, has it come down enough is the real answer. From 700 down to 385, which was the low. You take a look at the chart here. There's really been not many sustainable bounces. That was the high here. This was one exit sign, another exit sign, and then it's followed this trend all the way down. Okay, so down here, it's trying to build some type of accumulation pattern. So the question is, maybe okay, the growth is slowing in the handhelds, but was a move from 700 down here enough? So with that said, finally we had a little bit of a tradable move, and that's what we look for, tradable moves. Here's at 385. This was the red dog reversal that Friday. Okay. Then what happened? Something different. It gapped up above that close and held it. Something Apple hasn't done in a while. So that led to another 2-day move. And now, I talked on Friday. I said, I don't mind that it's down a little bit. Look at the size of the move. As long as it stays above, just say 415 to 417 in flags, that'll show you commitment. So far, that's what it's doing. So if we could hold above, just say this low here. Just use that as your line in the sand. 415.35 stays above that, flags. Maybe you get another viable move above 423 for the next spot, which resistance comes in around 434. So I still think it should be on your game plan. It popped back up on mine on this day-and-a-half move.
All right, moving along to quick hits for quick cash. We're going to kick it off with another bank. This is where we've been seeing the strength, Morgan Stanley. In fact, More Capital initiated a 4.5 million share position in Q1. And while that's old news and it's one of the fund's top 10 holdings, it's important to see where big funds have been picking their spots and looking for that relative strength.
Right, and recently Goldman and Morgan have been a little bit weaker versus the JP Morgan, the Wells Fargo, the regional. So it'll be interesting to see if it plays catch up. You go right here to Morgan Stanley. It's right on the lows here. So if you're not a momentum guy, you don't want to feel like you're paying up, maybe buy versus this low here. The low here is 23.83. A nice day on Friday, but in order for it to really get going, it's going to have to start getting above 25, and it's got to prove that it can hold above there. Right now, Goldman and Morgan have been the two weakest banks, and they just have something to prove here.
All right, moving along to TBT, another one that traders have really been active in as rates are starting to tick up here.
Right, and this is part of my 2013 thesis that if rates are going to go higher, you could be long TBT, short TLT. I've been tactically maneuvering them. Last week on Wednesday when we were here, I talked about buying that dip. near what, 71, 72. If you did so, look at the chart here, you will see this was a very big level that it broke above. Okay, and then, doesn't it make a little bit of sense if you sold strength, okay, and you saw it holding the 21-day? Look at this. It has not broken the 21-day or closed below it for this whole move since May. So it made a little sense to get long some. I know you had to take a little risk into the jobs report, but ultimately, this was your turning point. That was a nice entry. Gap and go, 2 highs. I still have some left on. And I think now it's going to have to hold above this gap, above 76 for a little bit. But ultimately, we talked about this reaching 80 at some point in 2013. Perhaps it goes even a little higher than that.
All right, moving along to SLV. We just spent some time with GLD. What's interesting here is it's 0.3% lower than where it was in the beginning of the year, but the base metal is down 40%.
Right.
So
I think, so when people are actually writing articles about that, how physical is still strong, but people are trading it and shorting it, and at some point it's going to equal out, so look out for some major short squeeze.
Right, and that's what concerns me, particularly with retail traders getting involved with GLD, SLV, or other derivative forms of that, is that the underlyings don't trade like stocks do. The supply and demand metrics are different there, so that's why price action and being nimble and being able to get in and out of these things quick is really key, because it can move huge against you like GLD did.
Right, and it goes to show you with silver, it could be tactical too. So last Wednesday or last Thursday, when you had that capitulation type move in silver and gold, I said let's look for a buyable strategy, and I did buy silver on Friday, but I have a thesis. I trim and trail into strength in order to book some and stay with some. So if you look at the chart of silver and show you that, you're allowed to lose on your trailer, okay, it makes a lot of sense. So just, this was, the macro pattern here that wound up working its way to the downside. So if you look down here, just to show you, my thought process, okay, on this move, first of all, we said between 17 and 18.5, I'd rather be a buyer than a seller. Well, it did get as low as 17.75. So if you don't buy in the hold to look for a bottom, you didn't have to. This was your entry right here when it traded above 18.30. Okay, so above 18.30, it filled the gap. Okay, so into this is when I sold 2/3, and I said, you know what, I'm going to stay with 1/3 just in case, right? 1/3 just in case it wants to trade above this resistance into this gap, or maybe even higher, but what happened was it gapped down on the jobs news. So what did it do? It got me out of my last third, but where did it get me out? At a good entry point around 18.30, so I lost on the last third, made on the other 2/3, and that's how you tactically go about it. It did close a little off the lows, and now it's gapping up into this, but overall, I guess now if you widen your time frame, you now have this lower area, but I would not be so involved here unless you really see something different at this point. It was a decent trade on some of it, and now it needs some time.
Right. Well, there's other places in the market where it makes more sense, and there's a lot of
all this stuff happens overnight in this, so
right.
It's like you have no control, and we like as traders to have control because we're sort of risk averse.
Right. And let's wrap it up with the darling of the electric car market, Tesla.
There's so much you can say about this stock.
Yes.
And
like the new Steve Jobs.
Yeah.
Right.
Listen, I'm a fan. I've been trading Solar City and Tesla. I was actually even a little late to trading Tesla, but it just shows you that if you're still late, you can get to know it. And those traders that are on my floor that have been getting to know it, they've probably been getting to know it since the $90 to $100 range. I'll show you ever since last quarter's earnings, stock's been unbelievable technically. This was the gap up that put it on the map. Here's your gap up doji. That's when it traded above this high, and since then, it's given you so much opportunity. Okay, from remember during the really harsh pullback in May, that's when it showed relative strength. This was a nice new high trade as it cleared this. Okay, and then it took time to consolidate, held above the 21-day, went sideways, and then remember we talked about another new high type of trade. That's when one buy price was above 110.25. Then you had another buy price above 114.90 right there, and it closed well. And then it even gave you a retest. Look at the retest right here of that 114.90, and now it looks like it's at all-time highs again. So if you're an investor and you look for new things, this was also a new issue. That's why we talk about the excitement of some new issues that grab hold. Look at this. You could have bought it right above this, and you're what's it, a three-bagger?
Right.
So anyway, with that said, if you're not one, because you know your time frame and you say, I'm going to trade these things for 1 to 3 days because that's what I like to do, I don't like to just sit in them, there are more than enough 1 to 3 day moves in here that has been continuing to the upside. So get to know this stock because I do think it's got a big future and it does move technically for guys that are looking to be active.
All right. Well, don't forget, guys, at the end of the day, every day, catch Scott as he wraps up the charts for us on Real Money, Options Profits, and T3Live.com. Have a great week.